Okay, welcome to the Swing Trading with Cycles channel. This is our update on Dixie. This is Fed speech day. Powell had a speech at the Brookings Institute. It's November 30th. Market actually just closed. It's just after 4 o'clock. Let's talk about the Dixie. The Dixie dumped today as risk assets rallied. I tweeted about this. I also have a video where we look at the live action across many assets. Definitely take a look at the link in the description for that. You should also see some options to click on the link to watch that video in the upper right hand corner and at the end of this video. Let's jump into the daily chart for Dixie. First, again, it is November 30th. Jerome Powell spoke today and people were expecting him to crash the markets, to have risk assets go lower. They did exactly the opposite. Now, we could see a massive reversal tomorrow. That's always potential. It's always on the table. But so far, what we have is risk assets rallied and the Dixie sold off. And so the Dixie had this low here on November 15th and then this low here on November 28th, which were essentially a double bottom. This was an undercut low. So you could call this your daily cycle at 21 days, which is why we marked it here. And the expectation was we would continue to rally. So we had a green day the next day. And then today, Wednesday, November 30th again, we actually started green. We know that because of this upper wick, right? At some point, this candle was green. It was like, okay, we're making new highs. And then Jerome Powell comes on. This thing gets slammed. What is this kind of candle? What is it called? It's called a bearish outside candle. Incredibly important concept. It makes a new high, and then it makes a new low. And it closes red, which is why, hence the bearish part. And that's significant because it means if it's a bearish outside candle, it means by definition, at one point it was green. Right? It's a candle that was green but closes red. That's important because it gets people off sides. And that's what happened in reverse on Monday. I got out of my UUP short puts because of this, right? I've gotten back in, right? It's like this bullish outside candle. You can see it made a new low, and then it was started red, and then it went green. In this case, we did the exact opposite. Like this, we did the exact opposite. Started green, but then closed red, like below the low from that previous day. In this case, it's massively bullishly outside. In this case, we just made a slight lower low, so that's not ideal. But at the same time, this structure is so kind of textbook. I mean, you go into a textbook to look at what a downtrend looks like, and you get something like this, right? So it's like, you see how we made this lower high, and then so this wasn't a lower low. We would have expected this to go below this, but it didn't. So that's the thing, right? We kind of double bottomed. But then now we're doing this. So like we'll either do something like this and then bounce, or more likely we kind of break through, maybe a small bounce at first, some kind of reaction, and then we break through. My expectation is 104.5. I would think we'd have somewhat of a strong reaction to that, and then maybe we work our way lower. And all this is happening right on top of the 200-day moving average, that in yellow. So that's the daily chart. So what this means in terms of daily cycle is this probably wasn't your daily cycle low on day 21, and we're continuing to decline. There will be rallies along the way, the lower highs. And if we think about the weekly cycle, this is week 26. We're making fresh lows. We know weekly cycles have lasted 33 weeks before. And so there's no reason why we can't continue to just decline into the weekly cycle as the daily cycle continues to progress. Most importantly, when we look at the monthly chart, we know that we're getting more and more evidence that we are descending into a 3-year cycle low. And that is because, we have started a downtrend on the monthly chart, right? We started a downtrend on the monthly chart. How did we do that? By forming a swing high. This month, September, was the high for this big rally that we've had, right? So we rallied for 20 months. This is a 3-year cycle, but theoretically, right? And we've had them before. This is a period where it's probably gonna last around 36 months, right? So we rallied for 20 months, and then we stopped rallying. We made a high, and then the next month we consolidated inside the range. That was October. And then November, we've now made a new low below the low from September, the candle that marks the high. So all of the action that happened in here happened in this range, and now we've broken down below that range. And most importantly, we have closed below that range. The candle closing is really important, right? Really important. The November candle is closed now. It is over. You can't go back anymore. That is how we closed. We have now officially closed as a swing high. We've closed well below the low from September. Not even like a marginal swing high. That's a big signal. That suggests we've now started a downtrend on the monthly chart, right? Like this. This was a downtrend on the monthly chart, right? This is a downtrend on the monthly chart. This is a downtrend. This is a downtrend, right? These are downtrends on the monthly chart. Doesn't mean it has to be severe as these past downtrends, but we are starting a downtrend, a series of lower lows and lower highs. The lower highs are important. It means we are going to have bounces along the way. We'll even have weekly cycle bounces, right? We'll have ICLs, right? Where then we'll have some kind of big rally. It'll look convincing. We'll rally for a few weeks and then it'll peter out. Now, what we really need to have happen for additional confirmation is a quarterly swing low. And that doesn't happen until we close below 104 spot 636. That's the low from Q3. This is our Q4 candle, which is growing redder by the day, right? If we continue to have downside in December, that's going to make this candle more red as we close the candle, right? So because the November candle is closed, done deal, it's a swing high for the monthly level. What we don't have yet is a swing high on the quarterly level. And if we were to get that by closing below this level in December, that is the kiss of death for this thing. The kiss of death. And that would be great for a lot of other assets, of course. The correlation would be awesome. And again, we would have a multi-month trending move. Those UUP puts, beautiful with that low IV. I mean, this could be a really nice run. And we know what's going to happen at some point. At some point, we're going to get the decline into the 3-year cycle low. If this is it, if we're getting that right now and we're going to have this really strong evidence, man, it's going to be a great 2023 in that case. And so that's the Dixie. I'll leave it at that. And I'll say again, definitely take a look at the real-time review of price to see how it's kind of moving around. And I'll also do a broader market update to kind of get a sense of how the S&P reacted. But I'll just say TLDR, it was bullish. I think this is the opportunity to get in the Dow for a run to all-time highs. We were like 7.5% off all-time highs just a few days ago, right? It just feels like a magnet at this point, especially with this tailwind. What I will say is we have the non-farm payroll coming up on Friday, so that's at 8:30. So we'll be watching that. We'll definitely put some content out about that on Twitter and here on YouTube as well. But we will leave it at that. Thank you for watching.